dear friends, welcome to SEKAR classes. This is lecture number 10. In this lecture, we will try to understand the major US stock market indices. Just try to recall, we already discussed what is stock market indices in our previous lectures. First, let me recall and let me define again what is stock market index. What is the definition? A stock market index measures the performance of a group of stocks representing a specific segment of the market. Then what is the purpose of this stock market index? All these things I discussed in previous lectures. The purpose is used to gauge the market's overall performance. Just we discussed that these are calculated using methods like price weighted or market capitalization weighted. That's what we discussed, isn't it? What are the major US stock market indices? First one is Dow Jones Industrial Average, DJIA. Second one is S&P 500. Third one is NASDAQ Composite, and fourth one is Russell 2000. We will try to understand these indices one by one. Let us try to understand. First one is Dow Jones Industrial Average, that is DJIA. This one I can say oldest US index created in 1896. It tracks 30 large publicly traded companies. It is price weighted index. I can say it is price weighted index. Its nickname, people used to call the Dow instead of calling its nickname is the Dow. That's what in many financial platforms we used to discuss. There are blue chip companies, and it has in this particular index we can find several blue chip companies, and it has got its own historical importance. What about this S&P 500? It's composed of 500 leading companies. Market capitalization weighted, covers various sectors. It covers various sectors, making it a broad market indicator. The S&P 500 is often used as a benchmark for US stock market. Its representation of about 80% of the US stock market value. Then next one is NASDAQ Composite. It includes over 3,000 companies listed on NASDAQ exchange. Basically, it is technology heavy index. Market capitalization weighted index. It is dominance by tech companies like Apple, Microsoft, and Google. It is its relevance in tracking technology and innovation sector. That's important. This is technology heavy weighted, and its relevance, it has got its own relevance in tracking technology and innovation sectors. That's what it says. The next one is this is about NASDAQ Composite. Next one is Russell 2000. It tracks 2,000 small cap companies. Market capitalization weighted indicator of small cap. I can say it's indicator of small cap market performance. Its role, it has got role in reflecting health of smaller growth oriented companies. It complements indices like S&P 500. If you compare all these indices, just see Dow, S&P 500, NASDAQ, and Russell 2000. Dow is focused area large cap, S&P 500 broader market, NASDAQ tech heavy, Russell 2000 small cap. Dow is weighted method is price price weighted method, whereas S&P 500, Nasdaq, Russell all are market capitalization weighted methods. Number of companies, you can say in Dow 30 companies, S&P 500 you can see 500 companies, Nasdaq 3000 plus companies, and Russell 2000, it has got 2000 small cap companies. That's what it says. Why are indices are important? We already discussed this concept also. They measure, indices measure market health, indices guide investment strategies, indices reflects economic trends, indices serves as benchmarks for mutual funds, ETFs and other investments. As we discussed all these things in our previous lectures, I'm not emphasizing that much. I can say indices offer insight into market trends. Different indices focus on different market segments. I request all of you to go through this lecture. I'm not emphasizing many things, as if you are aware small, if you have a broad view on these indices, it serves the purpose. If someone is interested, just go through different blogs. You can see in detailed explanation of all these indices in the sense Dow Jones Industrial Average, S&P 500, Nasdaq Composite, Russell 2000. Thank you very much.